Good day, all. Today we have with us a very special guest, Rishabh Goel. He is the CEO of India's one of the leading fintech startups called Credgenics, which has recently raised about $3.5 million, which is about 27 crores from one of the leading venture capital firms like Accel, DMI, Titan Capital by Snapdeal founders, and even industry veterans like Kunal Shah from CRED, Dilip Khandewar from Deutsche Bank. So Rishabh, thanks again, for doing this with us. I would really like to know, what is Credgenics about? What does it do? And tell us about the problem, you guys are tackling.
Thanks, Asim, for the warm introduction and also for having me here. I think, I'll walk you through our journey, like what exactly we are building and what we are up to. So quickly introducing myself. We started this in the year 2019. So myself graduated from IIT Delhi first in 2016. There, post that, mostly worked in the investment sector itself. Like was firstly working with Deutsche Bank and then was working with BlackRock. So during my course at these respective institutions, I think obviously I could figure out that how exactly the financial institutions are working in India and how where exactly the gap lies. So in the year 2019, I think there was a lot of boom in the fintech lending segment.
Right.
A lot of startups coming into the lending ecosystem to actually solve that and bridge that gap where the banks were not able to underwrite because of lack of data points. Like in a lot of tier 2, tier 3 cities, the loans were not being dispensed by any of the traditional banks. And the reason was that they obviously didn't have any data points to underwrite, to even assess the risk profile of the customers. So there are a lot of startups who are actually trying to bridge that gap and solving that first piece of the puzzle, which is how to underwrite a loan, how exactly to dispense it. And they were just acting as it was a kind of a DSA agreement where I'm just lending on behalf of banks books, but I'm charging a commission on it. So, but the second piece of the lending puzzle, one is obviously giving out the loan, but the most important part, how exactly to get it back with the interest, because ultimately that is the business model. If I'm not able to get the payments on time, it essentially means that the entire problem is not solved. So while we could see a lot of startups focusing on the first piece of the puzzle, the second piece of the puzzle was not being addressed to. And
Okay.
there we actually ventured into this industry to figure out how exactly the collections problem or how exactly the payments problem can be sorted and how exactly we can automate the different processes which are involved in a lending system. And that was the pure idea of how exactly the Credgenics was born. In Jan 2019, we actually started automating mostly all the processes which are involved in lending and collecting all the payments, which were being done manually in a very archaic manner before us. So it was mostly like there were different teams involved and people working around Excels to send out some communication campaigns, which were not being actually monitored, how exactly things are being happening. There were some calling units who were randomly calling the customers to remind them about their payments. Uh, and then there was another, if certain cases crosses certain delinquency, then there was some legal lawyers engaged to actually talk to them, understand them, or shoot out some notices, etc. So I think this was a very all these things were happening in their own silos. There was no streamlining, there was no shaking of hands between different departments, and there was no data driven strategies. How exactly I can automate most of those, how exactly even I should see that what strategy should I follow at an account level. It should not be one size fits all approach. It has to be a like a prioritization has to be done on loan accounts, and the strategy has to be decided across the loan accounts. It cannot be that I am following the same strategy across the entire loan book. So that piece we were actually trying to solve, and we started this in Jan 2019 with the platform being launched in Jan 2020.
Got it. Got it. Interesting. So as I understand, Credgenics is heavily invested in debt recovery and NPA management, which is a very niche space. And as I know that, India has lately seen some massive defaults. And, the Indian banking system is increasingly, crippled by the NPAs. So you
Right.
stated a while back, I saw one of your interviews, where you had stated that the default rates due to COVID, they were pushed up to about 60%, which is,
Right.
which is insane.
Right.
So
Right.
I just want to understand that how does Credgenics come into the picture? And can you please tell me more about the process you follow at Credgenics to contain the NPAs?
Right. Right, understood. So yeah, I think as like I think mentioned in one of the previous interviews that their default rates, which is the bounce rates, have touched 60%, and it's even more than 60% in certain geographies. But on an average, it's 60%. So which is much more than what exactly it used to happen pre-COVID. So this number is almost 2.5 times more than what it used to happen pre-COVID, which was around 25%. That was the rough number, which was on the first payments default. So obviously there are genuine reasons for it. Like people, there might be genuine reasons that people have lost their jobs and a lot of businesses have failed and a lot of businesses are recapturing. But there is also a bigger section of the society who actually have taken some undue advantage of the situation, and they are just then they are cases of purely an intentional default there. So I think to how exactly to segregate both of them, that becomes a challenge, and then that exactly what we are also trying to figure out if through a platform and through actually automating that process. So just to like give you a sense how exactly the different things are being done. So in in terms of the different key performance indicators which we measure, like for a lender, like there are three essential key performance indicators. One is the resolution rate, like pre-Credgenics, post-Credgenics, what exactly is the delta change in the your resolution rates across buckets.
Right.
What exactly is the TAT? What is the time to resolve? How exactly that is improving over time? Like if
Okay.
I'm able to resolve, let's say, an account in 45 days earlier, which was a pre-Credgenics number, and what exactly is the TAT after that? It has to reduce significantly if I have to take an average. And third, we actually measure is how exactly your ratio of the amount collected is to amount spent on collections is moving.
Okay.
Essentially, even if Credgenics platform is an additional cost center for them in the starting, but if they are able to actually collect much more higher than they were doing earlier, it essentially means they are looking as an investment with a very higher return. So it's a very high ROI. How exactly we do that? As I told you, I think so there's a lot of obviously use of tech sophisticated technology where we are using machine learning algorithms to train on the previous data in terms of automating the workflows. Like to give you a very simple example, communications otherwise, like which was what was happening in the banks, was there were some manual campaigns around SMS, around emails, around voice calls which are being done, but there was no actually mechanism or intelligence layer devised over that. How exactly what template is working well, which channel is working best at what point in time, what customer segment. So here we have automated the entire flow that bases even the borrower interaction. If someone is clicking on a link maybe 4 times in an SMS, obviously that gets a higher weightage. And there is a continuous A/B testing scenarios created on different templates, different WhatsApp, different channels, like what channel is working best for what customer segment at what point in time, where the maybe the click rate is highest, maybe the opening rate is the highest, so that the entire process of reaching out and even the next set of templates are decided basis how exactly the previous one performed. So there is no manual intervention in terms of triggering anything. It is purely how exactly my different templates have performed in the past and how exactly that borrower is responding at an EDO level. So it's not how exactly that overall generic my portfolio is performing. So at a borrower at a loan level, how exactly the different interactions are happening, the entire series gets automated. So I think that is one USP which actually we are bringing onto the table. Then second, entire process around the legal, around the litigation workflows, around shooting of notices, digital notices, physical notices, can be automated from the platform. There is no actually as such requirement for you to engage and do it manually. Like you have to otherwise you engage lawyers manually and do it in form of
Of course.
Excels.
Right.
So that with the like with our panel lawyers, which also we have, we actually assist them in shooting that out seamlessly
Okay.
across the different geographies. So I think that entire process around the litigation workflows, etc., is also automated. Third comes the calling part. If how exactly I am calling the customers. So there after the calls, actually we are working on a very good propensity to pay parameter, like basis how exact what was the sentiment of the call. You can actually prioritize and deprioritize the accounts. You have 1 lakh accounts to work on. How exactly I should consider that which accounts are very important for me and which are not. So I think at this point in time, what exactly banks used to do was they just used to have an Excel with them. They used to put a filter of loan amount, like highest loan amount with the highest priority order. So this is now how exactly things should be looking like. It there are a lot of variables involved in the entire process. So I think we should be looking at a lot of other important parameters, not only the loan amount. Loan amount is definitely an important parameter, but there are essentially a lot of other things which we need to take into account. And also there is a proper prioritization order created basis how exactly the borrower the same set of borrowers have behaved in the past. Like suppose there's a borrower in Mumbai West who has certain like who has certain salary and who has certain financial information background. So if we are able to figure out in the database that there is a new application with the same set of background, with the same set of financial information, then automatically that mapping happens and you are able to figure out that what exactly should be done at such loan accounts, whether an educational call needs to be done, whether how exactly if there is a civil awareness education which needs to be conducted, or what kind of template would work best, what strategy would work best.
Right.
If we could see that like there the default is very severe, then how exactly we can tackle it in a most stringent manner. So
I
I think
see.
all these things we decided. Yeah.
I see. So it's great. Like I'm understanding how Credgenics is a testament of integration of technology, integration of technology with finance and legal knowledge to create so much value in the banking sector. And it is totally reflected when I see your envious clientele. You have Kotak, you have Axis, you have Yes Bank, you have IDFC. I can totally see the kind of value you're adding to the system, which was not there before Credgenics. And that's great. So again, congratulations, and I'm really, excited about the idea you have. And, I have to congratulate you on, creating so much value in this space.
Yeah.
So Rishabh,
Thanks. One point, I think obviously this COVID era like helped us like maybe get onboarding on a faster scale, because I think that default like problem obviously increased during this period.
right, right,
So I think, yeah, I think that was, so in 1 year time only we saw a huge surge in client onboarding. It was more than 32 NBFCs we onboarded onto the platform in a span of 1 year. 6 banks got live on the platform in a span of 1 year. So it was mostly that we got 40 clients live in a span of 1 year. And obviously that COVID thing, which actually exaggerated this entire problem of defaults, and we actually also made that use case quite visible. Like earlier we would have to pitch them, but now essentially there was a mandate across the industry to scale up their technology infrastructure to handle those volume collections. So I think that was the need of the hour, and hence once we pitch it, we have seen a very good closure rate in terms of getting the platform live.
right. I totally see your point, and I see that how COVID pandemic has magnified your expertise and the value you're adding in this space. I totally get it, and it's pretty cool. Um, so Rishabh, I want to move to the next segment, uh, but now I want to touch upon the personal aspects of I want to understand your professional journey, Rishabh. I want to understand how you're a founder of one of the leading fintech startups uh, today. But tell me about your professional journey. How it all started, and what experiences you had in your previous jobs, in your schooling. When you came from Chandigarh, you made a name for yourself. You went to IIT Delhi. You're ex BlackRock, Deutsche Bank. How did it all add up to you becoming the CEO of one of the leading fintech startups in India?
Yeah, yeah, I think I'll just touch upon the journey. Yeah, so I think it started as of now. Also, I'm in Chandigarh. I'm at my
Okay.
hometown only. Yeah, so it started everything from here. Like obviously there was a curiosity and interest in number crunching and mathematics right from the early days. So there was a, like after my 12th, I think IIT was an obvious choice. So thereafter, actually in even in IIT, I think it was mostly around how exactly I was working around with different number crunching programs and all those things. So a natural extension after the IIT was to actually end up in some job who's actually where actually I can leverage my mathematical abilities, my mathematical
Right.
capabilities, and how exactly I'm interested in all these number crunching. So it was in investment banking or something on the quant role, which I was interested in actually to figure that out. So I think I landed up with my first job at Deutsche Bank, which was not a pure number crunching. It was a mixture of an investment banking role plus a quant role plus the roles around how exactly you have to consult different clients. So it was a mixture of everything. But yeah, so mostly I was working there like on the listed derivatives trading. So there it was a quite a new asset class for me. It was quite a also new segment for me, because in the entire 4 years at IIT, we didn't spend any time as per on trading or as per on specifically on the financial concepts or anything on the investment line. So it was obviously something which was a very new exposure for me, which I liked a lot, because it was a completely a new learning curve. There I took up my CFA, I took up my different charters in risk management to understand, to get more depth in the concept.
Hmm.
So I think obviously the work you was interesting and new, but over time you feel that you get saturated. Like there at this point in time, it is obviously a call you need to take, that whether you want to grow in this organization, or you want to be a very small part of a very big organization, or you want to be a significant part of a very small organization. I think there is obviously that internally it is different for everyone. Like from my perspective, I wanted some kind of a job where actually the impact which is being created by me is clearly visible, where I'm able to contribute and my contributions can are visible, clearly visible. Because I think if you're just being a very smaller part and you feel that you are replaceable at any point in time, it essentially means that there is no enough curiosity. There has to be some vested interest actually to do that. So I think that was a problem. And also I think I was just figuring out, like was on the sell side of this value chain, which is a like Deutsche is on a sell side. Then I moved on to the buy side, which is BlackRock, which is actually to see and understand the differences. Maybe buy side can intrigue me more, and maybe I'm able to actually associate myself with the buy side more than the sell side. So I think there worked at Deutsche for 1.5 years, but could figure out that a lot of, but it was clear in the mind that I had to start up. and and there was some obviously that entire ecosystem at IIT also was promoting entrepreneurship. I was myself heading the entrepreneurship cell of IIT Delhi for 2 years. So there I interacted with a lot of founders. There I interacted with the founders of Flipkart, Snapdeal. That's how I also met Kunal in one of the events at IIT itself, before he actually invested in our venture as a first seed check. So I think there obviously that exposure was there, and like creating value and becoming a job giver instead of a job seeker. Obviously, it's something that was told to us, taught to us across 4 years at IIT. So I think that was the entire motive. And obviously, that giving up or like finding the right time to start is a very tricky question. Like there is no right time. You have to take a call. You have to take a call, and you have to work on it. Like it's mostly that you have to take that risk. Otherwise, you will not be able to assess whether it was a good idea or not. So I actually took out a printout of a Jeff Bezos quote, which mentioned that like I might fail, but I'll not regret it. What I regret is not trying. So I think that was the entire motto, how exactly everything happened, and we started in 2019.
That's very well said, because I know that a lot of people have lofty dreams and big ideas, but they're not ready to part with their status quo and the safety of their monthly paychecks. And this
Right.
is something, since you've gone beyond and taken that risk and left that your envious job at BlackRock, one of the biggest asset managers in the world. I just want to understand what made you believe that, okay, I am okay with taking that kind of risk, and I'm okay with not getting paid a monthly paycheck, and I can really work on this idea. What made you believe that this is actually going to work?
I don't know. So there was no surety it's actually going to work. There have been a lot of hit and trials, iterations. So I think the problem statement was clear. How exactly to solve it, that was still not clear. So how exactly to go about it, how exactly to do that. I think so. It was mostly that like during the job, you cannot actually devote time, and this requires some time devotion. And it requires some kind of profile. Like I have since the start, I think there was only the tag names and the branding which was done, as you mentioned, IIT Delhi, Deutsche, BlackRock, CFA, FRM. So I thought it's some actual time to do some actual job where it's not a glamorous thing to do, but you have to actually work to the core, where you have to make your reputation right from scratch. No one knows you. No one knows you. You have to actually build a business right from scratch. You have to get a team together. You have to work on the business idea. You have to work on the model. You have to convince clients. You have to do sales. Everything you have to do on your own. So I think writing, working from the scratch, and that obviously it happened that 1 year it was a journey which was solo, that you have to actually get up from the bed, you have to figure out whom to hire, what to do, what not to do, what exactly different use cases you need to pitch, and understanding from the client also. So obviously till you find the right product market fit, there are multiple iterations done. You cannot just go into the market and sell it. Like there was some different aspect of the product, different version, entire different version of the product which I have thought. But once I actually went into the market, I understood the dynamics of how exactly, what are the needs, what is the demand, how exactly the market is functioning, how exactly it is positioned. Automatically those tweaks happened, a little bit pilots happened, some there was some obviously deviations which happened from the existing products. So that has to come up with the right product which is actually the requirement of the market. If I would have not taken that risk, I think I would have not even figured out that product. First of all, I would have not gone through those iterations. I would have not done that. And like obviously there was no security, but like, and in the Indian mindset there is a tendency that you have such a high paying job, such a status quo, you are settled, why you want to leave, why you actually want to do. But what I figured out was no one was dependent on me. Like none of my family members was dependent on me, so obviously this was the right time you can actually take the risk. So my risk appetite was high in these terms, and I also had enough savings to actually also invest without asking anyone. So there was a huge capital investment which was done from my end into the venture, just to see how exactly, so that that satisfaction is there. Even if I fail, that satisfaction is there that I tried. I actually worked on the idea I wanted to work on. So it was not on the lines that I was actually just planning to do that, figuring out the right time, and then by the time you decide, you get some other family engagements to work on, and you don't have the time. So at this point in time, I think it's the best time to when you have a right set of experience. Like right from college, also I was not of the opinion that I should start up without any experience, but that 3-4 years of experience, job experience, actually gave me some knowledge around how exactly organizations are decided, how exactly they're designed, their internal org charts, and how exactly the different problems and use cases are solved, how different teams are working, and specifically in the finance sector, since I worked, so I obviously had that understanding around the same. So it's mostly that I took a risk. It was definitely a shot in the dark. You don't know what's going to happen, what's in store for you, but it's definitely you have to carve your path and like figuring out the right dynamics. So initially it
Right.
was a tough journey, like where it was like essentially me figuring out how exactly to do everything from start. Now right now we have a team. It's mostly the plug and play role now you have to play in terms of getting the right positioning done, in terms of the hiring, etc. Though it's obviously a tedious task, but yes, right now it's a much better position. And had I not taken the risk, I would have been in the same institution, maybe at one higher level senior, but with the same regret that I have not tried.
Course. As I see it, Rishabh, what makes you successful, apart from the qualities you have from being smart, having a stomach for taking calculated risks, or being ambitious. There's something interesting you just mentioned, that how you had a different product in mind, but you adapted as you went into the market. And I think that's what makes successful founders and differentiates people who actually make it, and people who could have made it, the potential founders. And there's a very interesting quote I read in one of the books by Scott Cooper, Secrets of Sand Hill Road. He says, founders who are successful, we love them. We love those kind of founders who have strong opinions but are weakly held. And I totally see that in you, that how you had something in mind, and you put in so much effort, but when you went into the market, you know things, you were flexible enough to change it and adapt it. That was
Exactly.
great. That was great. So
I,
thanks
I
for
think
this.
pivoting is an important part. Pivoting is an important part. Like you
Right,
should actually
right.
acknowledge. You should acknowledge what exactly the market demands, and you should be a patient listener also. It cannot be actually a scenario that whatever you have in mind, you are forcing that on the market. It will never scale. It will never be adopted. So I
True.
think it's very important that you actually just listen to it and be flexible enough to find a product market fit and then scale.
Right, right. Thanks for this insight, Rishabh. I know you're a very busy guy. I'm just going to throw in this very important question which I had in mind, and I want to understand it. Credgenics has this quite a founding team by the three co-founders. I want to understand who are your co-founders, and what is the dynamic between you guys, and how do you complement each other in your
Right,
startup?
right. I think in the founding team, I think that's also a very important question, which a lot of early first stage founders also struggle. How exactly to build a founding team? What should be the different responsibilities across the different founders? So what I feel is that obviously there has to be, if you can figure out someone who's known to you, who have a chemistry with you, who knows you from start, that makes sense, because there are no disputes which are going to rise in future, even eventually as you scale, because difference of opinions like will happen. That is the law of nature. You will have difference of opinions, even within the family you have difference in opinions. You have something, but you have to come to a conclusion. I think it's better that if you found someone who actually knows you from the start, or you have a chemistry with, you have some dynamics with, and there should be as much there as less as possible an overlap in the skill set. Like it should be a complete different skill set for you all three, so that the overlap is minimalistic, in a way that everyone is taking ownership of their respective departments themselves. Because if there is an overlap, I think there also comes a lot of questions around how exactly to do, what to do. Then a lot of discretionary things happen. But if there is complete like there's no overlap in terms of your skill sets, obviously then everyone is unique in its own way. So they're handling their things very differently, and that's also also one of the reasons why exactly a lot of startups scale where have very less overlap in terms of the skill set. So from our perspective, so we have Anand, who is my batchmate from IIT Delhi. So he was a computer science grad. He worked at at 1mg at a startup, and was responsible for actually scaling that since like the inception of it, like since it was a team of 30-member team, and when he left it was around 1700. So it was mostly he had worked on a lot of products from start, and he had that kind of a curiosity in terms of understanding on the tech part, and he had seen that startup journey with some other startup earlier. So I think it made perfect sense for me to actually loop him in and rope him in and work like discuss this idea and get him on board to actually work on the tech side. So he's actually handling the entire tech and the product development since he has already worked in the past on a lot of products. And the second guy who's actually was is Mayank. He's like handling the entire legal and the operations part. So I think, as I told you, that's a confluence of legal, tech, and finance.
Right.
So from a finance perspective, from modeling perspective, I had enough insights to actually share how exactly different models needs to be designed, how exactly different things needs to be done. From a technology perspective, Anand came in as in to bring in all these products to actually make some sense for the end user and actually give that an entire journey in terms of right from all the processes from the start. And then from a legal perspective, from an operational standpoint, we roped in Mayank. So Mayank was also known to me since a long time. So my entire family is from a legal background. So he was known to me. Mayank is a lawyer, and he was a fellow at a World Mediation Organization, Berlin. He had done some interesting work in the mediation field. He was working. He was representing Delhi government. He was representing Human Rights Commission. So he was actually doing all these things at a very young age. So I think so from a legal standpoint, to actually get the legal insights into the platform, how exactly to facilitate that debt resolution, he was roped in. So together we three are respectively looking at different departments. Like I personally look at the sales, business development, investor relations, marketing, and all those aspects. Primarily on the side, how exactly the business should look like. And Anand is purely working on the product and the tech part, whereas Mayank is purely working on the legal and operations and the finance part. So I think it's mostly how exactly you complement each other. It's a purely a complementing data set. And in terms like obviously we take each other's opinions, how exactly to go further and navigate further down. Yeah.
Great. Thanks for providing this insight, Rishabh. I know you're a really busy guy, so again, I'll really like to thank you for doing this with us, and I really hope the million in the M in million turns into a B very soon. Uh, so
Yeah, I think so. This I can take this stage to as actually also I think like let you know. I think so. There is obviously basis the traction, basis everything. So I think there are a lot of there is a lot of still a buzz around our next fundraise, and some newsletters have actually mentioned it. So yeah, so I think everything is on the cards, and hopefully you'll listen to a new news very soon.
sure that I'm really I'm waiting to hear that. So again, thank you so much for doing this with us, Rishabh. And again, have a great day and best of luck for your journey in the future.
Yeah, thanks for having me, Asim. I think all the best. I think it's a very good initiative you have taken, and obviously it also increases the bandwidth. Like I also have the tendency to speak to a lot of founders of very new startups and all of them. So I think like the entire horizon, my entire thinking horizon increases. How exactly different problem statements are being solved, and if you are able to actually tell them to the entire public how exactly the different things are being done, I think it's a very good initiative.
Thank you so much. Thank you so much, man.